Good morning, you melon heads. It is 9:30 a.m. and Tuesday, January 10th, 2023. I hope you guys are well. Stocks are modestly lower this morning, just barely. They were down a little bit more earlier in the morning. Looks like they've clawed back a little bit now. Markets just opening as we speak right now. Jerome Powell is currently speaking at the Swedish Central Bank at this forum on central bank independence. I was watching that in the moments leading up to this live stream. He's saying nothing really earth moving there, as he rarely does, to be honest with you. There was some talk about the central bank's role in fighting climate change, and he's saying, no, that's something that belongs in the realm of public policy and elected officials. It's not him. He didn't make any comments directly about interest rates or quantitative tightening, and it looks like he's not going to make any comments about that. I don't know if the Q&A that happens later, if they're going to touch on that or if he's going to comment. If he does, I'll make a video about that later in the day about what he's saying. But for right now, not a whole lot going on over there. With that, I want to send a shout out to my man, Bob Costner2238, because it is time to shrink my big melon of a head. And let's take a look at what is going on in the indexes right now. The S&P is open, currently down just barely. Actually, it just went positive. Basically flat for the day. Nothing going on in the S&P. The Dow Jones, about the same thing, down an entire 1.22 points, or 0.00%. And the NASDAQ just barely in negative territory as well, down 7 points. So great big nothing burger this morning in stocks. Let's take a look at the U.S. dollar, or the DXY. This is the dollar measured against the strength of other currencies. Currently at 103.2, down 0.2% today. It was a little bit higher right now. The decline of the dollar, I suspect, is largely responsible for this mini bull run we've seen in stocks over the last few days, and I expect the dollar's probably going to head lower, my guess, somewhere around 100 before it meets some resistance. We'll keep an eye on that as time goes on. Bond yields today, across the board, higher, pretty much uniformly. I don't see the long end or the short end really making that different of a move. Everything is up about 1.5% to 2% this morning, so yields going higher. That is bond prices heading lower, by the way, and commodities, something of a mixed bag. We've got gold up $6 right now, or about 1/3%. Silver is just barely in the red today. Base metals are a mixed bag. Crude oil up 84 cents, or 1.13. That's WTI at 75.42, with Brent at 80.31. Nothing really earth-shattering going on in the commodity space. Yesterday, I did mention that gold was setting up for a golden cross, and we got that yesterday. Here we go. A golden cross is where the 50-day moving average crosses above the 200-day moving average. That is a very bullish technical indicator. I mentioned that yesterday, and I'm going to mention it again today, because sometimes a golden cross can trigger algorithmic buying, where the machines are programmed to see that happen, and they start triggering automated buys. So I am anticipating a move up in gold. We'll see if that happens. Again, with any time you're dealing with precious metals, you have to factor in just how manipulated the prices are. But that is a big technical event that just happened. All right, going over into the news today, we had another headline about layoffs today. This time it's Coinbase. I guess no big surprises there. Coinbase is one of those companies that's just been brutalized by the crypto winter, the collapse of FTX, the ongoing drama that's going on at other companies such as Genesis Digital Currency Group and Gemini. More about that later on. Right now, they are planning to slash 20% of their workforce. This just hit the tape today. How many people is that? That is about 950 jobs. So I mention that because, again, this is the story that I think we're going to see a lot of this year: layoffs, companies cutting positions, and this is the missing ingredient to a housing collapse. I've been saying that since the summer. The reason why housing has not collapsed yet is because of layoffs. We haven't really had the major job cuts. We have had fewer home sales, but we've also had fewer home sellers. As the buyers are disappearing from the market, so are the sellers. And so prices aren't really moving all that much. I know some locals out there have seen price declines, like San Francisco, Phoenix, Arizona, Scottsdale, areas like that are seeing declines. But nationwide, prices are still pretty much unchanged. However, if we get this big wave of layoffs, then sellers will enter the market, not because they want to sell, but because they have to sell. So that is something to keep an eye on as well. And also, speaking of the housing market, we've got Bed Bath & Beyond posting a much bigger loss than expected. These guys are living on borrowed time. They burned through almost $400 million in cash in the last quarter, and they are down to just $200 million left, which means Bed Bath & Beyond at most has 2 months to live unless they find some kind of financing. And who is going to want to lend them money or take a stake in the company when they're burning through $400 million in a quarter? So Bed Bath & Beyond, I would expect to see this one go belly up and file Chapter 11 not too long. Otherwise, they're going to get bought out by somebody for pennies on the dollar. Not a lot of good happening right now. And this is one that's going to be pretty much susceptible to the housing market, folks, because when would people go shopping at Bed Bath & Beyond? When they buy a new house, right? They get that extra bathroom or they want to upgrade their kitchen. So if the housing market takes a dive, Bed Bath & Beyond is going to dive right along with it. And they don't have too much further to go looking at their stock. Somehow it was up 24% yesterday. It's up another 9% this morning. The short interest in Bed Bath & Beyond is really high. My guess is this is some kind of war going on between the options traders right now. It doesn't really change the macro story of this company. This one is heading under, folks, burning through cash at the rate they are. They can't issue shares. I doubt they're able to borrow. I don't really see a path out of this mess for Bed Bath & Beyond. A couple of things I want to look at. Shout out to my man Crushing Bear from my Patreon group. He sent me a question about this. He was asking about this triangle or this wedge pattern in the S&P 500. This one could break either way. We've got a series of higher lows and a series of lower highs. I just want to zoom in on this one because we closed yesterday below the 50-day moving average with a shooting star candle right there that I'm highlighting in. It kind of looks like an upside down hammer. That's a little bit of a bearish indicator. Right now, we're up a little bit at the moment, but we're just below the 50-day moving average. So that's one to keep an eye on here. However, the NASDAQ, we've got a clear descending triangle here with the lows pretty much being consistent, even though the highs are getting lower. That is a bearish continuation pattern. So the S&P could break either way. The NASDAQ is suggesting lower. Meanwhile, the Dow trading above its 50 and its 200-day moving average. So we've got the Dow pointing to a move higher. What I'm getting at here with the three indexes and the three different patterns telling three different stories is the market is kind of at an inflection point right now. There's no strong technical indicator saying one way or the other, at least not in my opinion. There are other guys out there who might say differently. I think we'll get clarity on that later this week. I think the CPI report, I think the bank earnings, and to a lesser extent what Powell is saying right now is probably going to inform that. Looking over here at bond yields, this one is an important technical to keep an eye on because we're looking right now. This is the interest rate on the 10-year Treasury yield. This is going back to middle of 2021. You can see all through last year we were in this uptrend. We had this line that I drew, this ascending level of support. We hit it a few times and we bounced every time. And the reason I point to that is because we are right on that line right now. We're right on that line where the market is deciding, is this trend from 2022 of interest rates surging higher, is it going to continue or have we turned on a dime? Because first trading day of January, rates started heading lower and they've continued lower all along. And right now we're right at that line. We dipped below it and then it looks like we're going to pop right back above it today. So keep an eye on this one. My guess is it's still heading higher because the Fed is going to keep tightening. That's going to put upward pressure on rates. However, if this fear of a recession does take hold in the markets, you could get a flight to safety on the long end of the yield curve where investors start to hide in long-dated U.S. Treasuries. That would bid up the prices and send the yields lower. That would be a breakdown of this trend. Just something I wanted to point out to you guys. All right, we are getting a little long in the tooth. I got a couple of super chats I got to get to. Thank you guys for the support of the channel. Up first, we have got my man Crushing Bear who says, keep up the good work. The daily live is great. Thank you very much, Crushing Bear. I appreciate the super chat, the support of the channel, and your support on Patreon, sir. Link down below to the Patreon should you feel so inclined. And Crushing Bear, excellent chart work, by the way. Keep them coming, brother. I get a lot of good ideas, and the Patreon guys, they really get my gears turning when they send their questions and everything. So thank you very much for that. And my man Mike Binder says, good morning, Jack. Do you know why I ruined my morning listening to central bankers telling each other they saved the world with higher unemployment? Thank you, Mike, for the support of the channel and for the laugh this morning. Nothing will ruin your morning like listening to a gaggle of central bankers like we were just doing. Nothing big going on there. And I'm down to my last 10 seconds, guys, so thank you very much. Hi, Mom and Dad. I love you guys. And until next time, live small and dream big. Under 10 minutes.